What is good, Tesla family? It's Ray J back with another video. And in this one, I want to break down what's going on with Tesla, SPY, Nvda, the QQQ, and a couple of other tickers. I'll break down what's happening with the overall market thus far, what's going on with other factors involving Israel and Iran, and what you should be watching for as time progresses, as I give you guys some price predictions for all these different tickers. Before I begin to all this information, before I get into any more details, let me just mention a couple of things. I am firstly not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out the Weeble link, which is down below and in the description. If you sign up for Weeble and deposit $500, you're guaranteed 20 free stocks. If you deposit $25,000 or more, you're guaranteed 75 of them. And the offer ends very soon in just 13 days. Anyways, for Tesla, as you guys can see, Tesla was attempting to get a little rebound during the pre-market. It was all the way up in this 160 area. And I told you all that if we broke past 160, yes, Tesla could have attempted to push higher. But if we failed to do so, there would be a risk of it dipping a little bit. And once Tesla failed to do so, I gave you guys a bunch of warning videos about how Tesla failed to get the breakout and how I was anticipating some more downside. And that is what ended up playing out for today. We got this little rebound after the Fed beige book ended up coming out, at least throughout the markets, before we got another sell off. And yet, the market ended up closing. Relatively weak as we're seeing more and more tensions arising around the world. We're seeing yields going up. We're seeing cyclicals playing a big role in this. And there's so many different factors contributing as to why the market is selling off the way it is. So I want to break down more details about that, show you guys more charts and stuff like that a little bit later. But I first want to talk about some news and data for Tesla and the markets. So for today, as a reminder, we had the Fed beige book come out. This was showing that the economic strength is still there. It's claiming that there's still growth in the economy. Simultaneously, the labor market is not contracting too horribly, and we're starting to see wage growth perpetuating, and other factors like there, such as price increases are just kind of moderating. So the data looked pretty good in the Fed beige book, but the issue is we shouldn't solely just look at this because, firstly, the data could be very biased, and secondly, it's based off historical data. It's based off the past. In the future, things could be very different given what's happening around the world, and given how things could be affected by these other factors. So I just want to make it clear that yes, even though economic data is on paper looking decent, first off, I don't fully trust the data, but even if we just look at that on paper, that's what the Fed is going by. But even the Fed's data could still look worse if we continue to see more inflationary pressures and things such as like crude going up, energy increasing, or even wars could contribute to that, just to be frank with you, at least in the future. So that's why this doesn't guarantee anything about the future. It's just something that was worth noting. Market kind of popped a bit before it continued to start dropping. And what I mean by that is like if you look at Tesla, we got this little pop before we dropped. SPY did the same thing as the data came out, right? Got this little pop to 504 before we came back down. That's what ended up happening. But for tomorrow is going to be Thursday, April 18th. We have more data coming out. An hour before the market opens, we have initial jobless claims coming out, continuing jobless claims, not to mention the Philly Fed new orders and employment data, which is going to be important. So I would say initial jobless claims is still one of the most important things. So look for lots of data an hour before the market opens. We want this to be between 212 and 215,000. And simultaneously, we're going to be looking to see what happens with continuing jobless claims. So the jobs numbers are going to be very important before the market opens, an hour before open tomorrow. And then we also have Bowman, Williams, and also Bostic giving speeches throughout the day, starting from 9 a.m. until 11 o'clock a.m. Then we have some bill auctions coming out, and that's pretty much it at 11:30 a.m. The rest of the data is going to be quite minor, but the main pieces of data come out an hour before market opens. So look for heavy data in the morning, then a bunch of Fed speakers throughout the day, and minor data later on at 11 a.m. For tomorrow, if you're going to be day trading, if you're going to be looking at the markets, that's very important to note. For earnings, I'm not really seeing anything too significant today. We just have like Discover and a few others like that. I'm not going to really talk too much about that. But for tomorrow, we have TSMC, not to mention Nokia and a few others. Those are going to be worth noting when it comes to the different industries out there. And also, Netflix is going to be announcing earnings after market close. I'll definitely be paying attention to this one. So we have big earnings coming out for tomorrow. We'll see how Netflix does. It could affect tech. Now, for the overall market, the market is still very fearful amidst all this news that's coming out involving Israel and such. Now, let me just make it clear. Like I said in all my videos, I'm not going to give you guys a history lesson. These conflicts go on for quite some time. But with this whole situation, I'm not picking sides. I'm not going to say how it started. I just want to say that Iran launched retaliation attacks over the weekend. And then when they did it, they launched 300 missiles, which Israel managed to intercept. As a result, we were hoping that the whole situation would ease, but that is not the case right now. Right now, Israel is considering striking Iran, and Iran is saying that if Israel does it, they're going to be striking back with much more severity. My point in saying all this is we don't have to worry about who started what or anything like that. We don't have to point fingers. What matters right now is what's happening in the current time because that's what's affecting the market. And in the current time, the situation is still very tense. We're seeing both countries threatening each other. They're saying that they'll attack one another, once again, back and forth and back and forth. And that's very, very dangerous. Now, why is this so important? I just want to make it clear that this is causing fear in the markets. That's the first factor. This is being used as a catalyst to drop the markets because this is what cyclicals were suggesting. Yields going up as well as a factor that's contributing to this. And then as time progresses, if they keep attacking each other, crude will start going up, in my opinion. Right now, it's not going up. I know that because they haven't really escalated it to a massive extent. But if we get something really big out of this, crude is going to go up. And then once that happens, it's going to lead to more inflationary pressures. Also, it's going to affect trade and other factors like that that could affect inflation. So those are some things worth noting. Okay, if inflation starts going up thanks to this even just slightly, that would be a little bit negative for the Fed. The Fed is going to have to keep rates up higher for longer. And Jerome Powell said this in his speech that he's prepared to do this just to be safe. So as a result of all of this, with the drops that's coming to the markets, all this negative news involving wars and geopolitics, and then on top of that, you have yields, cyclicals, and all these other factors affecting the markets. The market is fearful. We're seeing fear driving the markets. We're seeing people starting to panic. Market momentum is becoming more neutral. It used to be greedy. Now we're back to neutral, approaching our 125 daily moving average. On top of this, the puts and call options positioning is going up. So we're seeing a lot more puts being bought. We're seeing a lot more shorts once again entering the markets, and they're starting to close a lot of positions, which is driving markets down a little bit more. And then the VIX is breaking out above its 50-day 50 daily moving average. That's important because when the VIX breaks out like this is showing that so far the market's on a downtrend. There's no sign of this stopping just yet. As far as Tesla goes, we have some negative news that has come out. Tesla has been laying off over 14,000 employees. They also laid off about 14% of their Buffalo employees, which is not the best of news for them. They're doing this because they have to handle a lot of pressures and they had to let go of some of their top executives, which is not the best of news. They're doing this to help cut costs and also to adjust to the current macroeconomic factors that are affecting the company. So, with this happening, Tesla's been getting a little bit of a negative reaction to this news alongside other things going on around the world and the overall market, which is affecting it. So this is still not the best of news. It's still making a lot of headlines, and this is pretty big for them. So with that happening, a big concern amongst different sectors and departments is that a lot of their really good employees may have to get laid off, and that could affect their productivity. There are some fears amongst many different employees when it comes to that. Despite that, we still have a sell rating from GLJ research. They just came out and said that Wells Fargo is also maintaining an underweight rating for Tesla. Despite that, the price price ratio is also dipping a little bit more, showing a little bit of weakness on Tesla's end, just a little bit more than before. And then Thursdays tend to be green only about 47.8% of the time. We tend to see more volatility at 10 o'clock a.m. So look for Tesla to be volatile at 10 a.m. Eastern Standard Time and also at 11 and also during the final hour of trading for the day. Despite that, that's what we're going to be looking for. There's been a lot of talk about more EV adoption from Congress, but that's pretty much it. Despite that, there are other things affecting it more. And I'm seeing that the most significant news has been what's happening around the world in terms of geopolitics, not to mention all this news coming out about Tesla's layoffs. Volume was only about 82 million, so it's kind of trying a bit as Tesla's becoming more sideways, kind of range bound. And the price pairs, not the price pairs, the price versus short volume is dropping a bit. So we're not seeing as much insane shorting on Tesla as what we've seen in the past, but it's still at a moderately high level, more than 46% of our entire volume. So it's still kind of high. With that being said, let's talk about what's happening with the markets. Let's talk about Tesla in a lot more detail. What do I see on the charts? What I'm going to first do is I'm going to hide my levels, and then I'm going to pull out something very, very crucial. So looking at the daily time frame, right? Tesla has this gap above here to fill up to 161. To do so, we have to try to break and hold 160. If Tesla achieves it, I'm back to bullish. So far, Tesla's looking relatively weak and hasn't been able to do that. So it's still favoring bears instead. Look at the trend on Tesla. It's a little bit more bearish. Look at the last couple of weeks. Used to be at 200. It came down, made this lower high at 180, came down, made a lower high at 179, came down. It's still on a downtrend, breaking below its lows. And then simultaneously, I'm going to be looking at the support at 152 because if we lose that, There's a big gap to fill all the way down in the mid 140s. Tesla has a gap down here at one, I think it's like around 145 ish, around there. So that's going to get filled if we end up losing like around that 150 zone. There is a risk of Tesla coming down to fill that gap, and the chart is still on a downtrend overall. So I just wanted to give you guys a warning about that. All right. And then if we look at a couple more tickers like Nvidia is showing weakness on the daily time frame. And then don't forget, we have this gap to fill down here. We have this nice gap all the way down to 823. We could fill this gap very soon as Nvidia has a bearish engulfing candle. It's looking kind of weak on the daily. So I see a risk of it coming down to fill that gap very, very soon, at least for the short term. For the QQQ, we already filled our gap down at 425. I called this out yesterday and also today as a possibility. We could rebound a little bit, kind of retest our resistance and continue lower. Because if we lose 425, we could still drop all the way down to like 421, 422. That's going to be our next support zone. There's still a risk of downside on the QQQ. There's no sign it's done just yet. There's still weakness on this chart, in my personal opinion. For SPY, on the daily chart, we look bearish. We could fill this gap all the way down to 497. We're not quite there yet. And then we could bounce in the mid 490s if we end up losing 500. So watch 500 to support. If we lose that, 497 is next. There is a risk of more downside. All right, guys. So that is it for the daily chart update for all these different stocks. I'm going to go over them again using the hourly, and then I'm going to break down some levels for you just to make everything very simple to understand. So I have all these levels marked on Tesla. It's very important that we go over these. They're very specific, very meticulous for people who want to like scalp and stuff. So for Tesla, we have support at 153.8. If we lose that, Tesla could come all the way down to 152. That's the last support we had before we came down for our gap fill. If we lose this 152 area, it could easily fall down into the 140s and start filling its gap in the mid 140s. So just be careful. Tesla is looking weak if we lose that support. Resistance, watch 155. If we break this, watch 156.5 to 20 EMA. We rejected very close to this many times in the hourly. Then we have 157.5. And if we break that, look for 160. To be bullish, you want to get back above 160, the 50 hourly moving average. If we break the 50 moving average, we could start pushing higher. We haven't done so yet. What do I see on the charts? Well, look at the last 2 days. We made this high. We had this high up here. We came down. Lower high came down. Lower high came down. The chart is bearish. Could we pop a little bit? We could retest 156 as a possibility, then start sinking down to about 152. That's a strong possibility on Tesla. The chart is looking kind of weak. So I do favor more downside on Tesla looking at the current trend, but I'm always going to be adaptive depending on which levels we break. Just know that there is a risk of it dipping all the way down to the lower 150s if we continue this trend. It so far looks more bearish. For SPY is also looking a little bit more bearish. We had this zone right here. We had this one very important support over here at 502.5. Then we had this resistance at around 506. We tried to break 506 and we failed. We failed. We got a big rejection. Once we lost the support, the big drop came to about very close to this 500 area. And you could see how well it's kind of maintaining these levels. So with that being said, from the way I see things, okay, I think that SPY could try to retest 502.5. If we fail to break it, there's going to be a risk of it coming back down to 500. If we fail to hold 500, we're coming all the way down to 497. My guts tells me it's going to pop a little bit and eventually come down. So look for that potential gap fill, then a bounce around there. There is a high probability that that's going to end up happening. On the QQQ, same thing as SPY could retest 429. And if we lose that support, we could be dipping all the way down towards 425. So look for 429 to pop. 429 to about 427, this range right here could be tested. Then we could start dipping to 425 again if that fails us. Watch 424, then eventually lower levels like 422 and 421. Those are strong possibilities on the QQQ. Part of why the QQQ could dip even more is because of Nvidia. Nvidia is showing some weakness. We had this big rejection and a bearish engulfing candlestick. We could push a little bit higher, retest. I was looking at about 853. This is previous support becoming resistance. Could pop to 853, then reject and start sinking all the way down to the 834 support. And if that fails us, we're going to dip even more. So I see a risk of a little bit more downside. So I'm seeing downside potential on Nvidia, on Tesla, on SPY, the QQQ, and even on Aapl. The problem with Aapl is we're hitting our 20 EMA, the green line here, and we're rejecting off this many, many times. We could try to push and retest 169.2 all over again, but I think that there's a risk of it getting rejected and falling to about at least 167.5, if not below that. So I'm seeing downside potential on Aapl. The chart is still looking a bit more bearish, so just be careful for the time being. So that is it for the main five I typically talk about, especially Tesla, which has a risk of downside. Let's go over the other stocks I typically go over as well. On the 4-hour time frame, Palantir is looking a bit more bearish. We're on a very, very weak looking trend right now. We could retest 21.5, then start sinking down to 21. And I think if we lose that, look for 20.5. So I do see a risk of a little bit more downside. The chart's looking a little bit more bearish. For super micro, it tried to break out today, hitting 1020, the exact level I called out, then rejected. So now we have support at 950 and also 941. If we lose that support zone, we're going to be sinking all the way down towards 900 again. This imbalance around 910 is going to fill. So I do think it could turn, but we have to watch for a break for confirmation for that to happen. We're just barely at support. Could it pop first and then drop, or kind of like drop from here? I do see a risk of downside looking at it. For Rivian, we came just short of our 20 EMA. We could reject here and start sinking all the way down towards 8.4. So I see a risk of this dipping a little bit. So watch for that carefully. On SoFi, there could be a rejection right here. We hit our 20 EMA and we could start churning. If we continue to fall, we're going to be looking for a move back down to 7. We have this head and shoulders like structure, and the chart is still a little bit more bearish. So I see a risk of this rejection leading to more downside towards the lower 7s. For the IWM, we're on a downtrend. We've been downtrending for many weeks now, and we've lost this support right here at 194. We actually closed a little bit under that. So I see a risk of this dipping all the way down to like 191. Look for a little retest of about 194 and then a drop all the way down to 191. I find that as a strong possibility. For AMD, I could see this dipping a little bit more as well. We have this previous resistance becoming support at about 150. So right over here, I think there's a risk of it coming all the way down to about 150. I think that if we break past 158, we could turn back to bullish, but I don't favor that. And if we end up losing 154, look for 150. I think it might end up approaching at least 150, if not below that. So it looks a little bit weaker. ARM got a big rejection after bearish news came out about their chips. So, in my opinion, I could see this dipping all the way down to 100 and continuing to drop lower. If 100 fails, let's look for 91. And if that fails, we're coming all the way down to about 80. So it looks very bearish right now. It looks very weak in terms of this trend. So just be very, very careful with the way that this has been moving. And I see a risk of more downside on this chart. On top of all of this, I just wanted to call out, we also have Coinbase. Coinbase is looking a bit more bearish. It is forming kind of like a double bottom leg structure, so I could see a retest of 220. If you reject off this, we could see this sink all the way down to this support zone at 205 to about 197. If we break past 220, we could turn back to bullish, but in my opinion, it looks to me like it might pop a bit and continue lower. The chart is still kind of weak, so we'll see how it does. I do see a risk of it coming down to about 200. For Amazon's looking a little bit more bearish. We have this nice little downtrend. We could retest about basically the 50 EMA or maybe a little bit below that. So I could be looking for a 182 retest. Then we could reject and start sticking all the way down to 180. And if 180 fails, let's look for 178. I see a risk of downside, so look for a little pop and drop like move. Amazon's looking a little bit weaker. Meta is also rejecting. Look for a retest of 496, previous support becoming resistance. And if we reject off that, we're going to easily fall all the way down towards 490, if not 485, very close to where our 200 EMA may be. So I see a risk of a little bit more of a rejection or even downside on Meta. For Microsoft, we're looking a little bit more bearish. I could see this thing dipping a little bit more. Look for a retest to about 413.5, then a rejection, and move back down to this imbalance at 406. So Microsoft got this break. It was in this channel right here. Look how it had this channel. We kind of lost the support, so I see a risk of downside. The chart is still looking kind of bearish. Google is in between supply and demand, so look at 157.24 as resistance, 155.98 as support. Whichever way it breaks will determine the bigger move. It is looking like it might try to push a little bit and outperform the market and hit 158. But this depends if it could break this resistance or not. So far, we kind of struggled to do so. So give it a little bit more time just to be safe. The VIX is on an uptrend so far. There's no sign of this rejecting. It looks like it might try to bounce off our 20 EMA and start pushing higher again. This could be a bearish signal for the markets. So we'll see if the market causes this to happen or not. So I'm going to be a little bit patient on the VIX, but there's no sign of the VIX rejecting. If you lose this support at 17.67 and this starts tipping, yes, that could favor that the market's going to bounce a bit. But so far, there's no sign of that happening, and the VIX is still on an uptrend holding up nicely. The 10-year Treasury yield does look like it can dip a little bit, all the way down to about 4.5, but it's not a very, very big move. It could hit this, then bounce. It's still on an uptrend. So it might dip a little bit, then try to rebound. Maybe the market kind of like gaps up a little bit. And then if this bounces, this could be bearish for the markets. The dollar is turning just a little bit. If we lose support right here, if we fail to hold above 106, this could favor the market bouncing soon. But for now, It came down a little bit today, didn't really get that bounce yet. This might try to form like a head and shoulders, so maybe it tries to rebound a little bit first. Maybe the market gets a final drop, and then we start to see the dollar dip as the market tries to bounce. That's a possibility, but the dollar is turning a little bit. This could help the market bounce soon. It already dropped today and didn't really help the markets, so it may not guarantee anything. But we're just waiting to see what the dollar does. If this continues to dip, this could help the markets to some extent bounce. We're not quite there yet. So, anyways, for Tesla, the overall market, the yields, the bonds, and then this whole news involving Israel and then the layoff news is really negatively affecting it. Tesla is still on a downtrend overall. It's been downtrending for many, many weeks now, and it's looking a little bit weak right now. So there is a risk of this kind of like rebounding. It loves to kind of like pop in the daytime, then drop. So it might gap up and pop and continue lower. We need a bullish catalyst for this thing to break out. So make sure you watch the levels I called out and just know that there is risks of downside in the markets so far. All right, so hopefully this video was helpful. Hope you guys have a great day. I'll see you guys very soon on the next one. Take care, guys, and I'll see you guys during the pre-markets to be talking about initial jobless claims and all the data. With that being said, enjoy the rest of the day. Take care, guys, and I'll see you guys very soon. Thank you, and peace out.